Hey there. You ever look at a stock chart and feel like you're just staring at a foreign language? Well, today, we're going to change that. We are diving deep into candlestick patterns, and we're going to turn that confusing chart into a story about what the market is actually thinking.
So, the big question is, can you actually learn this language? And the answer is a huge yes. You see, these charts aren't just random noise. They're a visual conversation, a back and forth between buyers and sellers. Every single shape, every color, tells you who's winning, who's losing, and maybe, just maybe, where things are headed next. So, let's get started, shall we?
All right, so before we can start reading whole sentences or paragraphs in the market story, we've got to learn the alphabet. We're going to start with the absolute fundamentals, the two basic letters that make up every single pattern we're going to talk about.
And here they are, our two letters, the bullish green candle and the bearish red one. That thick part, that's what we call the body. For a green candle, it's easy. The price opened at the bottom of the body and closed higher, at the top. For a red candle, it's just the reverse. It opened high and closed low. And those little thin lines sticking out, the wicks or shadows, they just show you the absolute highest and lowest prices the stock hit during that time. That's it. These two candles are the building blocks for literally everything else.
Okay, now that we know our letters, let's start making some words, some phrases even. We're going to kick things off with bullish patterns. These are the signals that hint that a downtrend might be running out of gas and an upward move could be just around the corner.
First up is a true classic, the hammer. You're going to want to look for this one after the price has been falling. The key features? A small body up top and a really long lower shadow, and that shadow needs to be at least twice as long as the body. Its shape kind of tells you what it's doing. It's trying to hammer out a bottom for the price. And that long shadow, man, it tells an incredible story. It's a story of a battle. The sellers came out strong, they pushed the price way, way down. But then, out of nowhere, the buyers came storming back and fought the price all the way back up. That powerful rejection of lower prices, that's a huge clue that the momentum might be about to shift. Next, let's look at a story that takes two candles to tell, the bullish engulfing pattern. Again, you'll see this after a downtrend. You have a small red candle, and then it's followed by a big, powerful green candle that completely swallows or engulfs the red one before it. This isn't just a tiny nudge. This is a sign of a major takeover. Just think about the psychology of this for a second. That first red candle shows the sellers were still in the driver's seat. But then, bam. The next candle, this massive green one, shows the buyers didn't just show up. They came back with overwhelming force. It's about as clear a visual as you can get that the power has dramatically shifted to the bulls.
Of course, the market is a two-way street. What goes up can and often does come down. So now, let's flip the script and look at the other side of the coin, the bearish patterns. These are the warnings that tell us an uptrend might be getting tired and a drop could be coming.
Remember our friend the hammer? Well, meet its evil twin, the shooting star. As you can see right here, they are perfect mirror images of each other. A hammer shows up after a downtrend, but a shooting star appears after an uptrend. And its long upper shadow tells the exact opposite story. Buyers tried to keep pushing the price up, but the sellers slammed it back down.
And yep, you guessed it. Just like there's a bullish engulfing pattern, there's a bearish one too. This time, after an uptrend, you get a small green candle, and then it's followed by a massive red candle that completely engulfs it. It's a powerful signal that the sellers have completely wrestled control away from the buyers.
This story here is just as obvious as its bullish cousin. The bulls were in charge, things were going great, but now the bears are back, and they mean business. For a trader, seeing a pattern like this pop up could be a very strong signal to think about taking profits before a potential slide.
You know, not every pattern signals some huge dramatic reversal. Sometimes the market just needs to pause. It needs to take a breath and figure out what it wants to do next. That's where continuation patterns come in. They often signal a moment of indecision.
And let me introduce you to the ultimate symbol of indecision, the doji. A doji is what happens when the opening price and the closing price are pretty much exactly the same. This creates a super tiny body that just looks like a little dash or a plus sign. The long shadows tell you there was a lot of fighting, but in the end, nobody won.
This candle tells the story of a perfect tie. It's a total stalemate. The bulls and the bears were in a massive tug-of-war, pushing the price all over the place. But by the end of the day, they ended up right back where they started. A doji is like a yellow flag in a race. It doesn't mean the trend is over, but it's a clear warning that it's losing momentum,
and you need to pay very close attention. Okay, so patterns are incredibly powerful, but they're even better when you use them with other tools. So here's a really simple, practical tip that can give you a whole lot more confidence in what you're seeing: drawing a proper trend line.
This is such a great little technique. First, just switch your chart from candlesticks to a simple line chart for a second. This gets rid of all the noise and makes the real turning points stand out. Then, for an uptrend, you just draw a line connecting the major low points. For a downtrend, you connect the highs. And then you just switch it back to the candlesticks view. And voila, you've got a clean, really accurate trend line.
And here's why that's a game changer. Seeing a bullish hammer pop up is interesting, right? But seeing a hammer form and land perfectly on top of a long-term upward trend line? Now that's a much, much stronger signal. Combining your tools like this gives you a much clearer, more complete picture of the market's story.
So we've learned the alphabet, we've learned a few key phrases of the market's language. Now the real fun begins. The next time you pull up a chart, the big question is, what story will the next candle tell you? Because now you have the tools to start figuring it out.
And before we go, just a quick and really important reminder. This material is for educational and analysis purposes only. It is definitely not a recommendation to buy or sell any stock. Please always make sure you consult with a qualified financial advisor before you make any investment decisions. Thanks for tuning in.